Hey folks, welcome to another episode of Business Redefined, your weekly, most comprehensive look at the world of business, finance, and economics. Tonight, we're having a conversation about digital payments. And as always, our regular guest on this subject, Mr. Shehryar Ali from Mastercard, Senior Vice President and Country Lead for East Africa and Indian Ocean Islands, right?
That's correct.
Glad to have you on set, man.
Thank you so much. Such a pleasure and always a pleasure talking to you.
It's been a while. I hope you've been well.
Oh, yes. Thank you.
Good to see you.
Yeah.
Mastercard and Genesis Analytics have put out a report talking about the Africa digital payments ecosystem. You're anticipating a staggering $1.5 trillion by 2030. Help us make sense of it.
Well, Africa is the second largest and fastest growing digital payments ecosystem globally. That tells you a lot about the potential it has because there are not many parts of the world left where digital payments and digital banking have that much of a runway to grow. So that's one point. Mastercard has been investing in Africa for the last 50 years now. And when we look at the opportunity, we still see that 60% of Africa is unbanked. Financial services are through alternative methods reaching out to people in Africa. It has to be accelerated. We also see that when it comes to mobile money, 70% of global mobile money flows are in Africa. A sense of great pride and I think ownership for Africa on that front. And MasterCard, through this report, has put all those dots together to say that if today the economy is sitting at about $250 billion, we see in 5 years a very optimistic outlook where $1.5 trillion is what Africa should stake claim at. And bring in efficiencies, bring in digitization, reduce the cost of money transfers, make financial inclusion come to life. We've been talking a lot about it. You and I have done programs around SMEs and how do we bring them into the fold. Fintechs, how do we vibrantly bring them into the fray? These are all real issues of Africa. And we need to put the dots together. This report gives us the seeds to put the foundations on top. And any company who's serious about working in Africa must encrust its strategy on data. And what better way than to actually use this report by Genesis Analytics? It has been commissioned by MasterCard and it promises the $1.5 trillion benchmark. In addition, MasterCard Economic Institutes has also done some reporting where we are looking at even countrywide growth rates. Like in Kenya, the GDP growth is expected to be at 4.7%. Global average is 3.2. We don't talk about that. We only talk about things that are going south, right? But I think it's important to encrust our decisions, our planning, our strategy in facts.
Shehryar, we've talked about digital growth. And I'd be very curious as to, in your own assessment, what's driving the growth of digitization in the continent and how does Mastercard position itself, one, to catalyze it and to harness the opportunities?
I think that's an excellent question because we sometimes don't look at the underlying factors of at the pace at which digital growth is taking place and what are the factors contributing to it. So you may remember 5 to 6 years back, you were looking at mobile phones being that catalyst. You know, we had mobile phones, predominantly feature phones because the smartphones were a bit expensive, but now the smartphones have come to the game and you are seeing a proliferation of that. So that was the last 8 to 10 years, which was really spiraling and providing impetus to mobile money and the use cases that mobile money unlocked. Then we said, okay, what will take this to the next level? And the access to internet was a major impediment up till now. Now you have, in addition to the great, strong mobile money services provider who are providing, or telcos who are providing internet access, there's the satellite internet access that has also come to the party. And the cost is becoming cheaper, the access is becoming wider, and we believe that with the availability of smartphones and internet access, you can now bring out APIs which can have a very good user experience. It can be multiple use cases unlocked through solutions that we are designing with our partners currently. And so that will accelerate the adoption of digital payments and digital financial services.
Shall we give us some more context around the pillars you're looking at? Because MasterCard has just made a commitment to double down on this continent and ensure it is accelerating growth. Tell us more about that.
Okay. So, look, the first pillar let's take on is MSMEs. What are MSMEs and what do they mean to Africa? 80% of all employment in Africa is coming from which segment? Yes. That earns a lot of respect, and any company that is serious about doing business in Africa must have solutions which talk to those MSMEs. Now, what are the pain points of the MSMEs? If you think about it, you'll notice that there is the access to credit. Big issue. We have track microcredit program as Mastercard, which we're trying to listen to that pain point, digitize firstly the cash flows that those MSMEs are today trading on. Then the data that comes on the back of that digitization can be used by banks and other lenders to underwrite those MSMEs and give them access to credit. Then there's a second pillar. So this is MSMEs. There's obviously a lot of training required for them. There is access to digital forms of payments that's required. But beyond that, the second pillar is the fintech proliferation. And that is something that we take very seriously. We have set up fintech factories with our partners like Diamond Trust Bank, MTN, and some of the other telcos. We are working with fintech marketplaces with their fintech arms. So that's a big area of unlocking for MSMEs and the wider African individuals and businesses. Then the third is around, again, the third pillar is around cross-border. Now, what is the cost today? 6 to 7% is the cost of inbound remittances or sending money outside. We want to make trade easy. We want to make remittances inflow easy for Africa. $100 billion of remittances comes every year to Africa. Kenya's own economy is 4 to 5% of its GDP is dependent on those remittances coming in. So at 6 to 7%, do we really think that that's the right economic price point for loved ones to send money to their families?
It's a bit steep.
It's quite steep. So for us, we are stacking our strategy very clearly around three pillars. We've talked about the MSMEs, the backbone. We've talked about fintechs who are the digital transformers and who are going to accelerate financial inclusion. We're talking about cross-border payments, which includes both outward flows and inward flows, and reducing the cost, bringing in efficiency, and providing wider access across Africa.
Okay. So what's driving the growth of digitization, especially around payments, and how is Mastercard then prioritizing the areas it will focus on?
So access to digital platforms is the main learning curve we need to quickly get over. So for example, if we look at the last 5 years, it's the access to mobile phones. Then they think, okay, feature phones can only go so far. So what about smartphones, right? So now smartphones also are at a nascent stage in Africa. Not everybody has a smartphone, and therefore the API experience, the frictionless experience is not there for hundreds of use cases. So that is already at play. And the third thing, which is the access to internet. Yes, we have amazing local providers. We talk about the telcos, they're there. Now we're talking about satellite internet linkages, where rural areas, remote areas where there is no internet access. We need to enable that internet access. Yeah. And on the back of that, then all of our business models, which remove friction, create interoperability, reduce the transactional cost of digitization, improve on the access to credit, because on the back of data comes access to credit. So these factors can only be vibrantly felt by Africa as a continent if we remove the friction, and access to digital infrastructure is the core foundation.
Okay. Something you touched on earlier, which I think is critically important in this conversation, is the subject of the micro, small, and medium-sized businesses. Oftentimes, if I could call them the mainstream players in the financial services sectors, will tell you they're too risky. We don't want to put our skin too much in the game for that. Mastercard seems to be going countercurrent. Why is that?
Well, the mere fact that if we are to be domestically relevant as Mastercard, we need to look at where is the biggest employment pool. Like I mentioned, 80% of all employment is on the back of MSMEs. Then you say, what percentage of the GDP of Africa is on MSMEs? That's coming to about 50%. So that means half the GDP. We as Mastercard cannot have a sustainable, strong strategy and commitment if we don't address this particular segment. So then we go through the layers and we say, because not all MSMEs are the same. You have at the top end, you have the middle end, and you have the bottom end, right? With the micro. And there are different pain points with different intensity levels that we need to solve for. So micro credit program of Mastercard, track microcredit that I've mentioned previously, is meant for small amounts of lending that happens on the back of the daily cash flows that get digitized, create data points, and then result in credit, which are basically a couple of days credit to buy stock, store up your shop, and you're able to continue doing your business and expanding in the process. That's one. Yeah. Then number two is access to solutions like tap on phone, solutions like QR. And why do I say tap on phone? You must have seen those big machines in the shops, right?
Yeah.
They cost. There's a $300 price tag to that. What we want is that a tap on a phone of an SME service provider should yield the payment. That should allow the payment to happen. QR, if you can take a picture, you've got a camera. The QR payment is also another frictionless, no cost for the form factor. It's just a sticker, right? So if we can remove those barriers from a cost constraint perspective and still digitize the MSME, that unlocks the data sets, that makes them grow their business pool. Thirdly, training. And I think for us, our enterprise or entrepreneur Odyssey program, there is the Mastercard Trust Center, where we have online training tools available for MSMEs to go and understand how to run their businesses better, how to plan better, how to capacitize better. And there are various other facets that we bring to life for the SMEs who are looking forward to support and help. So there are multiple factors with which we are approaching MSMEs and trying to make an impact in our little way.
Shehryar, allow me to ask you, and because of your experience, I think there will be very few people more competent to answer this than yourself. I think about 2 years ago, Kenya launched the national QR code for payments. How come the traction has been so slow? If you look at jurisdictions like our neighbor Tanzania, QR payments is quite a thing. If you go down south in South Africa, QR payments has massive traction. Is it that we had too much of a first move advantage by mobile money, or what is at play here?
Yeah. So I think there are cycles and there are waves in which such proliferations happen. You will remember when Safaricom came out with M-Pesa, at that time, there was no such thing as mobile money payments, right? And then by making the adoption easy, both from the wallet holder perspective and for the payment acceptance perspective, it spread like wildfire because the model was an easier, lighter lift and shift. All you needed was a mobile phone to accept payments or make payments. Yes. Now, what is QR? QR, even if it's in its interoperable form factor, it still requires somebody who can scan the QR and somebody who can accept money on the back of that QR. Now, banks, telcos, fintechs, they all have to actually adopt that. Tanzania, like you rightly said, did it very early. And so today, 200,000 QRs exist. Yeah, 200,000 merchants don't need a POS machine, to accept payments. So if we were to go that route of interoperability, like you rightly said, it was a great initiative, and it is a great initiative by CBK, where there's an interoperable QR at a low cost. Mastercard's cost for acceptance on QR for a domestic payment is 0% interchange. 0%. This hasn't. It's huge. It means that you could price your merchant discount rate to negligible, right? So it's about realizing that benefit and making it easier by having enough service providers out there. So the big telcos, the big banks, this is a call to them that, let's see. Yes, we do today might be enjoying reasonable margins on our current form factors, but it'll be really good that we segment. Like I said, all MSMEs are not the same, right? You have the SMEs at the top end, middle, and bottom. Maybe QR is meant to be from between the middle and the bottom, if not across the board. So it has its role to play, and we look forward to higher adoption rates in Kenya.
Shehryar, if we had this conversation 4, 5, or not even 4, I think about a decade ago, we'd be discussing formal financial inclusion and digitization largely from mainstream banking, savings and credit cooperatives as they're popular in this market, and limit it to that point. Increasingly, we have to have a conversation about the role of fintechs in this ecosystem. What do you see as the role that fintechs play in the digitization activity, and also how does Mastercard then support fintechs to ensure then they have the longevity to continue being a catalyst for change?
So, some of us big companies today started out with that same fintech spirit. And if you look at even Safaricom and M-Pesa, it started out as an experiment and then really caught like wildfire. And now today it's the status quo. It's not the banks, it's M-Pesa, which is the status quo, right? And mobile money is proliferated across East Africa substantially. So that fintech spirit, what is that fintech spirit about? It's about innovation, digital transformation. Banks are highly regulated, and that limits sometimes their access to a certain segment of customers. So what fintechs do is they create that bridge. And we as Mastercard believe that we need to support the fintechs, do what they do best. If a fintech is coming in the healthcare sector or in the insurance sector or the education sector, they need not worry about the payment modules around. we ought to connect the payment modules as a card as a service. Our Fintech Express solution enables that. You don't need to do anything. You can do acceptance and you can do payments through that solution. So that's one example. Data as a service, we provide that as well to fintech, so that if you want to make sense of your portfolio, which could be a huge portfolio, you've suddenly grown as a fintech, you've got millions of customers, but your activity ratio is very little. That's not success, is it? So, so we come in and we study your portfolio, segment it, tell you how to invigorate your portfolio using campaigns, value, convenience, and other things. Then we shouldn't forget the big segment in the agri space, because Africa is largely agricultural. So in the Made Alliance for Africa program, whereby we have come and worked together with African Development Bank, Equity Group, Microsoft, Haifa International, a host of others, where we have said we are going to bring in 100 million individuals and businesses into the financial inclusion fold across Africa. And in that are solutions like Community Pass and Farm Pass, which are basically essential services. Not only do they provide ID for the farmers, but it also enables them to source inputs for their agricultural business. It provides them access to marketplace so that they can, on their phone, sell their produce when it's ready. So this digitization is not just about convenience for farmers. It's also about the data points that it generates, where the farmer can go and say, well, I want to expand my business. Bank number A or lender number B, can you use this data to underwrite me a farm loan or a crop loan? And then I can expand my business, diversify my business. So these are pain points that we are hearing from the farmers, hearing from the agri community, that we are trying to solve for in our humble effort. And I believe it's giving us great results. We've already got 3 million farmers enabled, digitized across East Africa alone. And our goal is to get to 15 million within the next 5 years.
So you're helping us just to address this challenge that we perennially have around credit being linked to collateralization through data capabilities.
We are so stuck with the collateralized based credit that it is so painful for MSMEs, agri or farmers. And I believe that, yes, collateralized loans do have a role to play, but it cannot be the status quo. We have to look at data. We have to look at cash flows and build the infrastructure.
Let's dial down by talking about cross-border payments. You began this conversation by highlighting just how much you're seeing this scale very fast. What is Mastercard seeing as its role in cross-border payments, especially given the trends we're seeing?
That's a great question. So, Julian, if you think about it, $100 billion coming into Africa is not a small amount. Okay, 6% of the GDP of Africa is coming in the form of inbound remittances. So then the question is there friction? Is there what cost or economics is this inbound transfer coming in at? Right. So when we look at the data, we're seeing that it's around 6 to 7% cost, right? And then friction, it shows up its face because the access is not ubiquitous. It's not easily accessible to every player. So I'll give you an example. We went to Ethiopia, a big inbound market. Yeah, big Ethiopian diaspora all over the world. We worked with the largest bank, commercial bank of Ethiopia, and we enabled their app, which is called the CBE Bear app, to accept from 5 billion cards globally. Because everywhere in the world, cards are issued, right, against your account. So what we did was we said, okay, you simply come to that CBE Bear app. You put in your card number and credentials. You choose the amount you want to send to your family, parents, loved ones, whoever. Send the transaction. Our payment gateway authorizes that transaction. The bank, on their side, do a API call to credit an account. Now, why am I bringing this focus here? It's not a card. It's an account at the beneficiary's end. It could be a wallet. It could be a card. So we are bringing that flexibility into the system. In Kenya right now, the biggest players are in project mode. They are bringing this to Kenya. And there are other markets in Tanzania and elsewhere where this solution is really pioneering itself in making the cost lower. Real-time friction is being removed, so the real-time payments happen. And there is a sense of access globally, meaning that anybody can actually do it. So that's one. Now let's look at outbound, because we have trade to cater to, right? So in the case of outbound, the average cost is again running between 5 to 7%, which is quite high. So the Mastercard cross-border services is a alternate solution where we drop the cost by 40% and we remove the intermediary. So in the normal trade flows, there's always an intermediary entity which does the trust kind of, guarding the trust factor. In our case, what we've done is, since the Mastercard rails itself warrants that trust, and we have experience, we have history, we have security protocols and all of that. So we are reducing the friction by making a peer-to-peer payments. Yeah. So that is catching or getting a lot of attention. We are live in Tanzania with the largest bank there, utilizing our trade flows, which predominantly are focused in that case from the Dar es Salaam port into Kigali, into landlocked countries in Africa. So these are just a couple of examples where we are actually bringing a lower cost, less friction, easier way of enabling trade for outbound and cross-border payments.
Powerful point there. In a minute, Shehryar, your parting shot.
Oh, we are super excited. As you've seen, Mastercard has opened its office in Mauritius in end of last year. We have opened our office this year. I'm delighted to inform you, in Uganda. We have opened our office in Ghana. So that tells you how bullish Mastercard is on Africa, and for the right reasons. This report just validates that. And we believe that all partners, all stakeholders need to come together, collaborate with each other. It's open invite to whether you're a telco or you're a government or you're a bank or you're a fintech or you're a merchant. Let's collaborate, ideate. Just be mindful of the problem. We need to just know the friction. We need to know the economic price point. We need to know the user experience, and we mustn't forget value. So we, as Mastercard, commit to you that we will bring value, convenience, frictionlessness, trade, interoperability, and ultimately, again, for the continent, for Africa.
We've been having a conversation with Shehryar Ali from Mastercard, focusing on digital payments and a couple of issues ranging from MSMEs and how we address the friction in the digital payments they're experiencing, the fintech and their role in the ecosystem, and just the potential that Africa's digital payments has a projection of $1.5 trillion by 2030. We shall be keeping tabs on that and bringing you the latest, so stay tuned.